conversation with Siddharth Shah, the co-founder and CEO at Pharmeasy, which was once the largest medical services platform in India. Valuation ups and downs, learnings, lessons, the rights issue, and more importantly, the road ahead. All of that will be discussed. Thank you so much for taking time out and joining us in our studios. So I just want to talk a little bit more about the beginning, because very big investors, be it TPG, Temasek, and I'm not going to get into the entire list of that. Tell us a little bit more about how you really scaled your business.
So the journey goes back to 2012, and I think I must thank my professors at IIM, because it was a final year project at B School called Dial Health, and my professors were kind enough and insisted that I start the venture while I was right at B School. And then most important thing is that I'm lucky that I have other co-founders along with me who've been friends for ages, and we all saw this come to fruition from 2012 to where we are today.
I definitely want to talk a lot more about the rights issue and the debt component, etc. But let's go back to when you bought that stake in Thyrocare. That was about 4,500 odd crore rupees. What was the the sensing behind the deal? Was it largely from moving from low margin drugs to high margin testing services? Was that the thinking behind it?
The thinking behind it was that we still believe that there is a phenomenal potential to create a digital platform on top of the physical infrastructure that exists today in the country, and provide access to affordable outpatient healthcare across the length and breadth of India. Now, through our platforms like Retail.io, Acnamed, and Pharmeasy, we were ensuring that retailers, customers, hospitals get access to high quality, low cost, affordable healthcare products. But to complete the loop of outpatient healthcare, we thought that we need to ensure that people get not only medicines but also services, that is diagnostics, people get access to information. And we thought the best way for us to scale that would be to have a partner like Thyrocare within our ecosystem. And I'm glad to say that Thyrocare today is the largest lab in India in terms of number of tests being conducted, has presence across 280 districts through 4,000 plus partners. And we are now able to go out to all the consumers, for example, of Pharmeasy, and offer them affordable diagnostic testing at home through a network that has the highest percentage of NABL accredited labs, and a promise guarantee where we run something called as on time or free promise, which means that if your tests don't get done on time, your phlebotomist doesn't show up at your doorstep on time, your testing is free. And I think this guarantee of on time or free on top of phenomenally reliable network is something which is a testament to what has worked well for us after having bought out the majority stake in Thyrocare.
Okay, and there was something interesting that you brought up earlier that maybe I want to touch upon, because yes, there are rivals within this space, be it 1mg owned by the Tata Group, there's of course Reliance on NetMeds, Flipkart Health Plus, and of course a number of other names. Tell us about how your market share has been affected or impacted on the back of this, and how really indirectly a lot of your competition as well feeds into Thyrocare that you were discussing.
So look, the way we think about it is, first of all, the market is phenomenally large, right? I think there is two ways that you can look at the market. You look at, hey, all these digital players or new age players who are promoting digital, accessible, affordable healthcare. What does your market share inter say? Or what is this group per se as part of the overall outpatient healthcare ecosystem, right? I think all of us put together are barely scraping the surface. We are all below 10%, right? And sometimes we go ahead, sometimes they go ahead. I think the way we think of ourselves is a combined platform, right? And I think we've just come out with our FY23 numbers. We're well north of 6,000 crores in terms of net revenue, right? I think that clearly puts us in a phenomenally large position to be able to leverage our network and do the best across all of these segments. And I think you're right. We don't think of any of these people purely as rivals or competition, right? I think there's a lot that all of us are doing together to promote digital healthcare. But as an example, right, there are areas where all of these players are taking a similar approach like us, which is to provide 360-degree outpatient healthcare. And now there are certain areas where, like I said, Thyrocare has a presence, but these people do not. And they're very happy to work with Thyrocare as their preferred testing partner, right? And I think without going into much details, almost 20% of Thyrocare's revenue comes from these partners, right? And I don't want to take any specific names, but a large part of Thyrocare's business, as we all know, is B2B, right? So Thyrocare has 4,000 plus partners to whom it provides diagnostic services. These partners in turn have their own consumers, right? So it's a B2B platform, Thyrocare, and a large part of Thyrocare's B2B revenue comes from working with these new age partners also and collaborating with them, right? So we believe that it's a very collaborative approach that we have, and that will ultimately fuel our growth as well.
Given that the focus really has been on maximizing revenue and overall profits as well, you were talking about 6,000 crore plus. What about the average order size? Has that really gone up as you're looking at, providing integrated products, cross-selling, all of that?
Certainly. So our focus is that for the consumers that we have, right? And I'll give you a couple of measures, and I spoke about this at our AGM some time back. Today, more than 77% of revenue on Pharmeasy comes from repeat users. So a large part of focus has been that we work with consumers or retailers or hospitals and see what best we can do to take care of their entire need, right? Because there's just such a phenomenal number of retailers, let's say 100,000 retailers, or couple of thousand of hospitals, couple of thousand doctors, and I think we have 39 million plus registered users on Pharmeasy. The idea is that even if we were to get, let's say, a 40-50% wallet share out of these, I think we would be at a phenomenal scale, right? So today, for example, in Mumbai, of the total value of products sold in the city, our platform accounts for about 10%. Now 10%, is it a large number? It's a large number. But if I look at the example of Gurgaon, we are 40% of that market, right? So, I'm just saying the potential to just grow in terms of where you are is just so phenomenal, right? And that is what our focus has been in terms of getting more per user and giving them all of that, or more per retailer, more per hospital, and so on and so forth.
So how many registered users total did you say that you have?
39 million.
Okay. What about the outlook as well when it comes to the workforce? Was there, layoffs that had taken place, etc., in order to restructure?
So I think, yes, we did have a couple of team members who were not, whose roles were consolidated, right? But I would also like to say that some of these things were part of our journey as well, right? So it was to be done regardless. As an example, in FY22 we acquired Thyrocare, we acquired Acnamed, we had some distributors. Now it was just absolutely unsustainable to, let's say, have 4 CFOs or 4 procurement guys or 4 different operations guys, right? Ultimately, all of these roles had to be consolidated and streamlined, right? And because all of these were independently, reasonably self-sufficient organizations, but I think synergies come when you're able to leverage all of these and bring them together, right? And so a lot of these were part of our transition, but I can tell you that one of the things we're very, very happy and proud of is that all of these were done in a way where I would say for like 99% of people, till and until they actually found an alternate job, we actually never let people go, right? So we had this as part of a plan, and we told them that, like, look guys, we need to consolidate these roles, and therefore, there is going to be a planned transition. And I think people are really, look, in today's day and age, everybody is smart around, the fact that people have to grow and consolidate at the cost, right? By making statements which are in the air and not telling them the truth, people know that, you're not being upfront and honest. I think the best part is we got to tell them that this is a transition which is going to happen over a year and a half, and therefore they knew what they had to do. And we had very amicable, happy exits versus telling people, okay, you're here, you're fired, but okay, I'm firing because of efficiency or because you're doing well. People don't want that, right? People know the truth. So I think consolidation has been a theme that we've been working on, and it's yielded very good results.
Let's talk about the 3,500 crore fundraise. The fact that Ranjan Pai as well of Manipal, he pledged an investment of 1,300 crore rupees. Tell us a little bit more about this rights issue. Is he going to be joining the board of API Holdings?
So the investment of Dr. Pai is obviously subject to CCI approval. We are hopeful that it will come, pretty soon. But yes, assuming that the CCI approval does come in, we do expect that Dr. Pai's family office, along with his affiliates, will be investing at least north of 1,000 crores. I'm not sure if we will get a chance to have the entire 1,300 crores, because, like I said, the rights issue has been oversubscribed, and by the waterfall mechanism that we had put in, unfortunately, we may not be able to provide Dr. Pai the entire quantum that he would have wanted to invest. But yes, subject to CCI approval and closure, Dr. Pai will be joining the board of API. He will be a non-executive director. I mean, this investment is coming from his family office. It's not coming through Manipal Hospital, so he does not intend to take an operating role. But we do expect that Dr. Pai will join the board of the company.
And your other investors as well participated in this rights issue. What is going to be the structure, the shareholding structure of API Holdings? I know approvals are still underway, but if you could share.
So I think the thing we're exceptionally proud of is that most of our shareholders have participated as part of the rights issue. So starting from Process, Temasek, TPG, ADQ, LGT, Amansa, right? And I think the list goes on. But like I said, it's also important to note that our retail shareholders participated, and most importantly, more than 132 crores came from our employees, right? Which is, I mean, it's from what I can recollect, it's one of the biggest ever participations coming in from employees, right? And just shows that there is tremendous amount of faith that the team also has in terms of what the business is doing and how it's growing, right? So the way we also feel internally is that yes, there was a need to raise equity in order to repay the debt. But if I look at the operational performance, I think the company has never been in a better, healthier shape, right? And I think employees can see and feel that every single day, right? So obviously at a shareholder level, there is a concern around the debt. But now with this fundraise, hopefully the debt gets taken care of, and the focus is back to perform.
What was the debt at, and how much has it been?
So the debt was, I mean, in May 22, we raised roughly $300 million from Goldman as two different bonds. A bond of $200 million and another bond of about $100 million in terms of tranche. And again, I spoke at our AGM. The intent is that the $100 million bond gets repaid immediately from the fundraise, and the $200 million bond has, while it's a 4-year bond, so when we raised the money, we thought that we'll need 4 years to repay it, and therefore it was up till May 26. And that has a period of up to May 25 for which at least we have to hold the bond. But at least as soon as we get the money, we'll park that money aside, and at the earliest possible after having discussions with Goldman, we will be repaying that bond as well.
What about the pricing war that we're seeing within the space as a whole? Have things now sort of stabilized according to you?
See, our understanding is that competition or all the peers that we have today, I think more or less everybody knows that people are here for the long run, right? I don't expect that Tata 1MGs go away anytime soon. I don't think that Reliance Netmeds is going to go away anytime soon. Neither is Apollo going to go away anytime soon. And all of these people are going to make significant investments in their own way to further the cause of digital healthcare, right? So I think there's a realization that when I go back a couple of years, right, there was always the worry around who will stay, who will not stay, who will consolidate. I think now there is an acceptance, and in fact, it's more like peers in terms of saying, okay, look, we're all going to be here, we're all going to grow. We may have different strategies, but at the end of the day, all of us together are going to have to invest to bring more and more affordable healthcare across the length and breadth of the country, right? So I think that change in mindset as it is, I think brings about a lot of stability in terms of how people view and operate and take care of things.
And overall public listing, IPO plans, anything?
Hopefully soon. I think there will be the right time to do that.
Give us a sort of a timeline. Is it years ahead? Is it a few months?
I don't have a timeline right now. I think the first focus right now is to get the first regulatory approval, which is from CCI, and get these investors on board. But I must admit, we have over 20,000 shareholders today, right? Our corporate governance is like that of a public company, right? Even today, more than 1/3 of our directors, as required by law, are independent directors. The head of our audit committee, Subbu Subramaniam, who used to be the CFO of Titan, is an independent director. Our chairman today is Mr. Adya Puri, right? So in terms of corporate governance, we behave and we work as if we are listed. I know it's our obligation as management to get a listing done so that our shareholders also get a shareholding in a listed company. We know that that's an obligation on us, but we also want to come now to the market where we've proven our performance, right? The last time in 2021, 22, when we wanted to go public, we were asking people to bet on our potential. I think the Indian markets have told very clearly to all the companies that come to us with performance, we will reward you. Come to us with potential, we want to see your track record, right? So I think it's important that we go. We're on our way there, right? So which is why I said hopefully soon. And we go to people saying that, look guys, we've proven what we at least wanted to, and I think that should be a good time for us to go public.
You spoke about Adya Puri as a chairman, and anything you want to share with us, any instances or memorable moments, how he really contributes, or any advice maybe?
Look, I think Mr. Puri is phenomenally passionate about the cause of promoting affordable healthcare across the length and breadth of the country, right? It's not very rare. I mean, it's not very often that you'll see that, Mr. Puri takes and devotes so much time and energy, right? So a lot of our efficiencies, right? I mean, the culture that he built at HDFC Bank, which is in terms of high performance, keeping the customer at the center and giving everything to them in a 360-degree manner, right? I think he wants to bring that similar culture to us in terms of how we approach healthcare, right? So his focus is that, look, you like I said, right, that you have a phenomenal amount of retailers, a phenomenal number of hospitals, customers already. What can you do to take care of all of their healthcare needs in a seamless way, frictionless way, right? I think something that he's been focused on. I think he's also played a very pivotal role in ensuring that we start focusing on semi-urban and rural part of the country, right? Most people have a belief or a myth that as you go to semi-urban and rural parts of the country, your costs go high, but you don't have a large enough market. In fact, in those areas, I would say that you have a phenomenally large market, but you don't have enough of your peers or competition over there, right? So I think Mr. Puri's played a phenomenal role in ensuring that we keep pushing more and more into the semi-urban and rural parts of the country where we can provide a phenomenal service. There is a phenomenal need, but not as much, focus from our peers and competition.
Okay, fair enough. What about like diversification? Will you look at like health insurance, other areas, any plans?
I think right now we already have a lot on our plate, right? In terms of, the varied number of customers and the products and services that we have, focus is to consolidate. But at the same time, we have to realize that the distribution channel that we built, and I call distribution in terms of our access, I mean the platforms that we built, right, can act as a phenomenal distribution channel for various healthcare products and services to reach out to like 40 million consumers or 200,000 retailers, right? So we may not necessarily, let's say for example, become an insurance provider, but can we partner with one and get them to 40 million consumers so that they can get access to the right kind of healthcare insurance product, right? I think that is something which may be on the anvil soon, right? And I think we can do a lot with the reach and scale of our platform.
So what's going to be the key priorities? What's going to be the commitment to shareholders when it comes to Pharmeasy, long-term growth projections or plans?
Look, I think the commitment is that there was a time when we were focusing on getting phenomenal growth. Sometimes that growth came at all costs. I think the focus is now going to be on sustainable growth, right? And you will see a lot more of efficiency, focus in terms of whatever I think the assets that we've acquired, you will start seeing a lot of the cross-pollination or synergies coming out of those, right? As an example, I was telling you, we built out the Pharmeasy consumer diagnostics, which is what we call Pharmeasy labs, where you can go on the Pharmeasy platform, request for a phlebotomist. The phlebotomist turns up at your home at a pre-decided time. If the phlebotomist or your test does not happen on time, the entire test is free, right? So we want to build phenomenal level of consumer satisfaction. Now that business has grown from zero to like more than 150 crores in like a very short span of time, right? So I think this is a perfect example of using quality testing of Thyrocare at the back end, the consumer reach and the platform at the front end, and creating something which is phenomenally great for the consumer but also phenomenally value accretive for us and our shareholders, right? So you'll see many more of such things coming about in terms of how can the various different platforms that we have today working in sync and creating, like I would say, phenomenal outcomes for both the customer and for our shareholders.
It's been such a journey for you, as I started at the beginning from a student to where you are now. Any lessons, any learnings that you've taken, maybe any regrets, particularly when it comes to Thyrocare? Do you think that you overpaid or?
So I think one thing we've learned is that there's no regrets, right? Are there learnings? Certainly, yes. Right? I think looking back, and since you mentioned Thyrocare, I think each of the partnerships or the acquisitions that we've done, we still stand by the industrial logic of those acquisitions, right? Looking back, one can always reflect on, hey, could I have done this better or could I have done that better? Are there learnings? Certainly, right? And I think I'm the first one to say that as the CEO of the company, the buck stops at me. And if there's anything wrong, I must take accountability for it, right? And there is no shame in saying, okay, there are learnings and we made mistakes and we're learning from those. But I do believe that all of these, again, structurally have been very, very good decisions, right? And yes, about learnings, I think should we have thought much more about, bringing some of these synergies in earlier? Certainly. Should we have thought about, how our, debt will mature, right? I mean, we thought that, okay, there'll be an IPO and we'll pay it off. Maybe there should have been a plan with that if the IPO doesn't happen, how do we do it? Certainly, right? So I think I can speak not of 1 or 10, maybe of 100 learnings, right? But I think there are no regrets around, what has happened.
Good to know, and that's part of the journey. And since you're so entrenched in this healthcare space, I just want to ask you as to how you're looking at the Indian, the health and wellness sector really growing. Have there been any learnings, like maybe personally when it comes to health, taking cognizance of your health at a younger age, or getting tests done, or any advice that you have for people?
I think one of the biggest learnings, at least, that we're seeing now
Just from a healthcare
standpoint, is that a lot of us just take our health very, very lightly. Just getting some tests done at an early age is phenomenally essential.
What's an early age?
I start from 30, I would say, right? I mean, I'm 35. I still think that, I started a couple of years late. There are so many examples, right? And our testing has now become so advanced that there are early indicators and markers around what can go right or wrong, right? And I can show you so many social media posts where people have actually come to us and told us that, hey, because of these markers, we realized that maybe there is a latent cardiac issue. We got it tested, got an angioplasty done, and now we are doing well, right? And had it not happened, we would have really ended up in a bad place, right? I just think that it's just exceptionally important. I mean, if there is one message or one learning, is that we've seen so many people at a young age get early leaders or markers because of testing. Just getting one test done a year, I think with the kind of income that we have, especially, I think it's a very small part, but the outsized outcome because of those tests, I think, is just phenomenally large.
Regular body checkups.
Regular body checkups. I would say the number one thing that we've learned, and especially start doing that at an early age.
So when you're not talking with investors, when you're not talking to the media, and when you're not talking pharma and healthcare, what is it that keeps you busy, Siddharth?
I think just spending time with friends and family.
Okay, great.
I mean, like I said, I still stay with my parents and phenomenally proud and happy about our culture.
Yeah.
I have a wife. My sister just got married. And I just think spending time with them, and more importantly, all my co-founders, right, my friends, we're all thick friends in school, right? So Dharmil and I were together since we were in junior KG. Dhaval and I were together since junior college. Harsh and Hardik have been friends since college. So I just think spending time with friends and family is enough and more to ensure that, we get all the highs and lows in our stride in a nice way.
Super. Thank you so much for coming by, Siddharth. Good speaking with you.
Thank you so much for having me. Thank you.